Morning, market chameleons. TGIF. Thank God it's Friday, Dimitri. How you doing, buddy?
Good morning, Will. How are you?
Great. Lively chat this morning. You ready to get started right away?
Yep. Good morning, everybody. Thanks for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for. Well, I think you switched off.
Oh, sorry about that. Disclaimer.
Call your broker. That's what they're there for. Your broker's there to help answer your questions, provide you with guidance. There's the disclaimer, everyone. And awesome. With that, let's get going. I'm going to share my screen real quick. So let's start out today. We'll take a look at what's moving into pre-market hours. We'll also take a look at what's coming up on the earnings front, see what the straddles are implying, compare those to the historical earnings moves. We'll take a look at maybe some bullish, bearish option ideas, maybe also since we've been kind of looking at this new report with the insider trades. I'll come back to that. Maybe you take a look at it once a day, see what's popping in there. I'm still looking at that report and trying to, figure out things that are being reported on that SEC website just to enhance it. Yeah, I think, and if there are any questions, Will, let me know along the way. I'm going to try to, answer any questions that are popping up in that chat. So let's get started with that. This is, everyone, this is the pre-market report. Stocks that are trading actively in the pre-market hours. We have the most active stocks over here, the biggest percentage gainers, biggest percentage decliners. The first thing I want to do is filter out what's going on in the higher market cap stocks. So I'm using this filter market cap. Let's take a look at stocks 20 billion market cap or higher. So right away, I see here we got 44 that made the percentage gainers list, 3 on the percentage decliners list. So from this, looks like a, favors a much more bullish outlook at the open. Let's take a look at just the ones that are popping up on top. Docusign that reported earnings, I believe, last night, up 6.4%. I'm going to click on it just to take a look at that price action activity. So we see here Docusign closed at $231. That was up 6% yesterday. In a pre-market right now, trading $245.55. That's up 6.3% in the pre-market hours. Here's the VWAP, pre-market VWAP 244.12. So we're a little bit above that VWAP price. Here's the range in the pre-market, as low as 239.20, as high as $247.80, trading 216,000 shares. And this is what the pre-market chart looks like. So right around here, reported earnings started climbing. If you want to read about it, here's some of the headline news. You could just click on it, read it. I'm not going to go into interpreting the earnings. I'll leave that up to you. But let's take a look at it from the perspective of price action analysis. So I'm clicking on this tab. This is an earnings history, and we'll see what did historically, how did that stock react after reporting earnings. So here I'm coming down. It doesn't look, we'll tell you, like it had a full, this is going to go up to 12 quarters. So it's relatively new. It doesn't have a full 12 quarters. So we have a little bit fairly new stock, not a very deep history, but according to at least this in the last 11 quarters, we're looking at day of earnings. So opening gap, half the time it opened higher, half the time it opened lower for an average gain of 1.7%. From an absolute term basis, we're looking at the magnitude of the move up or down. So we're converting all the moves to positive. So on average, it moved 6.7% up or down on average in the pre-market hours, which right now that's close to where it is, up 6.3% in the pre-market. After the open, from the open to the high of the day, the average move was 2.9%. From the open to the low of the day, the average move was 5.6%. So it looks like, a little bit skewed more to the downside. And from the open to the close of the day, it was down a little bit more than up. So 60% of the time it closed lower from the opening price, 40% of the time higher for an average loss of 1.2%. So that's really quickly a price action analysis on Docusign. Looks like after coming out of earnings, it's kind of 50-50 up or down, although on average it had added 2 gains historically following an earnings release. Let me close this up. I'm going to come back right now to the unfiltered report really quickly, unless you have questions. Well,
nope, you can move forward.
Okay, let me see here. Let's do this on any. So here we got some stocks moving here, lower cap stocks, HGHS, that's up 118%. Looks like there might be some news on there. I see some headlines on Benzinga. STRO, also, this was a $39.6 million market cap stock. STRO, $653 million stock, up 44%. That's only 128,000 shares. So this one, actually, HGSS, it's not a lot of headline. I'm not sure what's going on in it. It looks like a Chinese real estate company, up 116%, but you could see on 9.3 million shares. That compares to a float of 6.8 million. So very active in the pre-market hours. Don't see any like catalyst news behind it. Let me just take a look really quickly at its gap history. So this is looking at historically how this stock did after gapping up in the morning. And we're looking at the 12 largest moves in the last 3 years. So we see that these are the dates. It looked like yesterday it also had a gap up. These are the dates. These are the gap moves in the morning. Then we see what it did the rest of the day. So we see on average, the 12 largest gap moves in the last 3 years were 24.8%, which is today's way higher, 116%. We saw one here up 100% on June 15th, 220 after the opening. And this is a very, looks to me like an illiquid stock. It looks like on average after the opening, the average move from the open to the high was 14.3%. From the open to the low, average move down 18.9%, skewed a little bit towards the downside. From the opening to the close, more often than not, it did close lower. 83% of the time it closed lower, 17% higher from the opening price. On average, down 7%. It looks like a lot of those times, those opening gaps were the high of the day. That's what these zeros are saying. So that's really quickly price action analysis, an example in the HGSH. You could open up any one of these and take a look that way. Let me see, before I go into jump into the earnings, I did have a question on blockchain. So I'll take a look at this one. What do we see? Docusign was up there on the 20 billion. Here's Docusign. So I did have a question on block trades, big block trades, and how to look them up for the pre-market. So I'm going over here, big money stock flow. You kind of default to the support resistance tab first, but I'm going to come here and switch to the stock block trades. And what this is doing is filtering out any block trades that are either what we consider block trade is 10,000 shares or more on a single trade, or a single trades that is either $200,000 worth of notional or higher, right? So the assumption is that if it's that big, it's not likely a retail investor. So here we have, a bunch of stocks that are trading right now in the pre-market. So I'm going to put this condition. I'm going to say, just show me, let me see, where's that trade condition? Why am I not seeing it right now? Am I on the wrong date? Do you see a pre-market? Well, why am I not seeing this right? Oh, here we go, pre-market. So we've got a lot of trade conditions in there. So these are today's pre-market big block trades. So we see a bunch of them. I'm just going to go and filter out Docusign just to show you as an example. And this is what it looks like. You know, it's right now it's sorted by time. So here's the symbol, name, market cap. This is the current price. You know, this is showing you how far away the current price is from this block trade. So here, 838.02, we see 882 shares traded. That's a single trade at $246.37. That's $217,000 worth of stock traded. That this is the price. This is where the bid and ask was at the time of the trade. This was the closing price. So it's 6.6% above that closing price. This is the trade condition. So it was an intermarket sweep order, and this one traded on the NASDAQ. So here you could see which exchange, if it was in a dark pool, like for example, this third one right here, this one was matched up in a dark pool, 996 shares, traded for $246. That's $245,000 worth of stock. That was matched up in a dark pool, then got reported on the TRF system. So that's really quickly how to look up block trades. You could do this intraday, pre-market, after hours, but I had a question pop up, you know, how to look that up. So I wanted to show it really quickly. If you don't have any questions on it, Will, I'm going to jump to the earnings.
Yeah, jump.
Yeah. So we'll take a look at what's coming up in the earnings in the next 2 weeks. I'm going to use this filter to look for stocks that on average trade 5,000 contracts or more per day. I'm going to switch this to next 2 weeks. These are stocks expected to report in the next 2 weeks. On the top of the list, we got JKS. I believe that's a solar, right? Let me just make sure.
I'm pretty sure it is, yes.
Technology. So they're expected to report, or actually that's Monday, right? Monday before the market opens. The straddle, so that's buying the call, buying the put at the money, is implying a move of 19.6% in either direction if you're buying that straddle. That compares to historical 4-quarter earnings average move of 10.7% and a 12-quarter average move of 9.1%. So we see we're 9% above that 4-quarter average move. We are 10.5% above the 12-quarter average move. And the high move on JKS in the last 12 quarters is 21%. And these are I usually don't reference these, but these here, this is the average of the implied moves heading into earnings. In other words, what were the straddles implying heading into earnings? So in the last 4 quarters, the average was 15.6%. So you could see right now we're above that. And the average of the last 12 quarters was 14.9%. So those were the average of the implied moves. This is the average of the actual moves. So you could see here in the last 4 quarters, the implied on average, we're implying 15.6. The realized was 10.7. So you could see there that's about 5% differential in the last 4 quarters. If you do it in the last 12 quarters, the average of the implied moves was 14.9 versus 9.1. Again, that's more than 5% differential between the implied and the realized. Okay. COUP, that's expected to report Monday after the market close. Right now, the straddle as of yesterday's close was implying a move of 10.2% in either direction. That compares to a 4-quarter average move of 8.4%, a 12-quarter average move of 7.4%, with a high move in the last 12 quarters of 25.2% in COUP. And if you really quickly just want to compare how did the implieds on average do versus the realized, again, these are the two reference numbers over here. Okay. TOL, Toll Brothers, that's expected to report Monday after the market close. Straddle right now as of yesterday's close, was implied move of 8.1% in either direction. That compares to a 4-quarter average move of 6%, 12-quarter average move, realized move of 6.1%. So we're 2.1% above that 4-quarter average, 2% above the 12-quarter average. Last one, SFIX. That's expected to report Monday after the market close. Yesterday's straddle closing prices implied move of 16.4% in either direction. That compares to a 4-quarter average move of 12.8% and a 12-quarter average move of 16.5%. So we're 3.6% above that 4-quarter average and almost in line with that 12-quarter average. The high move in the last 12 quarters in SFIX, 35.2%. Well, if you don't have any questions on the earnings front.
Well, we did. I just actually put a link that once you mentioned SFIX, that's Stitch Fix. And I remember Jake wrote an article, I think last week on his Seeking Alpha. So I put a link out there for anyone who's interested. He walked through a trade he was thinking about in Stitch Fix. It's worth a read. We did have a question. Someone was asking about TOL. I know that's been an interest in stay-at-home play. They say, housing in the suburbs is all of a sudden in demand again. But they were wondering, they saw the earnings opportunity thing pop up. Maybe you could walk through a couple of those.
Okay. All right. So this is Toll Brothers. Once you click on, this link on the TOL, it'll take us to look at further details on earnings. Let's first take a look at the history, and then we'll see what trade opportunities are popping up. So here's in Toll Brothers, these bars up and down, they're showing the percentage move that the options were implying in either direction. Okay, so if you start from 0, this straddle over here, this was from December 5th, 2017, before the market opens. That red bar shown the actual moves. So after reporting earnings, Toll Brothers was down 7.4% on the day. The implied move, according to the straddle, was up or down 5.7%. That's why you're seeing this red bar go below that bracket, basically broke through the implied straddle. When it's green, that's going in the opposite direction. When they reported earnings, the stock on August 21st, 2018, before market opens, the stock was up 13.8%. That compared to an implied move of 6.1% in either direction. So in that case, it blew right through that straddle. You could see it's right above that bracket. Let's take a look at the summary of the historical. So it looks like historically, 67% of the time, the straddle overestimated the move, meaning the straddle was priced higher than the actual move 67% of the time. On average, the move heading into earnings, the straddle was implying a move of 6.3% in either direction. That compares to the average of the realized moves of 6.1%. So we see about a 0.2%, very close, 0.2% differential in the implied versus the realized. And we do see here that if you're long that straddle, is only a winner 27% of the time, but on average, you actually eked out a little bit of a gain there. And I think that's because of these couple outliers over here where it really moved, right? You probably had a little bit of premium left in that straddle. So on average, even though you only won 27% of the time, those big moves eked out a slight gain. Let's take a look at the implied volatility. So this is looking from the perspective of what did the implied volatility do after earnings, and we're looking at a option that's 30 days out to maturity. So when we look at the move, we look at the very near-term options, which are mostly gamma, not as much vega. If we're looking at a longer dated option, in this case 30 days, it has a little bit, it has more vega, right? So the further you go out, the more vega is in the option. So, and these is how people would do time spreads, right? Playing the move very short term, the implied volatility crush in the longer dated option. So for an option with 30 days to maturity, the day after reporting earnings, on average, the implied volatility was down 20%. So day before earnings, the average implied volatility was 40.3. Day after earnings, the average implied volatility was 32.1. 5 days later, the average implied volatility 32.5. So you can see here, on average, the implied vol crush was 20% day after earnings. And if we come down here, we're getting closer right now to their earnings. So we see here, right now, we're at 52.6, which is already above, the average with, this many days to go to earnings. But the high was 66.1, low 30. So we see here, there's 66.1, May 27th. So we're above that average, but not as high as the very high. Let me take a look here on the option strategy. So it looks like maybe over here, we're getting a couple trade ideas over here. So the credit call spread, selling it 2 days before and closing day after earnings. This is the selling the at the money, is buying the out of 25 delta out of the money call. That was a winner 83% of the time for an average gain of 34%. So mimicking that, those legs right now, that would be selling the 47.5 call on December 11th expiration, and buying the 51 call for a credit of 90 cents. We think it's worth 87 cents. So that's like a 3 cent theoretical edge. Again, here's a credit call spread. This one is selling it, if you're selling that at the money, buying the 25 delta call out of the money 2 days before, taking it off day of earnings. That was also winner 83% of the time for an average gain of 34%, mimicking that, very similar. December 11th expiration, you're doing the 47.5 call, buying back the 51 call, you're just closing out a day earlier. Here's a diagonal call spread. So this is selling it at the money near term, buying and out of the money further out. That's starting 2 days before to day after. That was a winner 90% of the time historically in the last 10 quarters for an average gain of 26%. So let me take a look here. So you're doing the December 11th, selling the 65 call, buying the 52 call in December 24th expiration. Looks like for a 65-cent credit, we think it's worth 26 cents. So that's a theoretical edge of 39 cents. So that's how you would go going through it. Again, maybe Toll Brothers, who knows, historically it was doing poorly, but if you think something's changed, and things have changed, right? Coming up, we have a stimulus and 0% interest rates, very low mortgages. So you have to take all that into consideration when you're looking at these things, right? Maybe you need more compensation, or these are only looking at from a historical perspective. It's up to you to kind of go in there, research it, and see what's changed this time around, and you got to handicap it for those changes. Is that helpful, Will? If anybody's
that was
asking.
super helpful. Actually, Jen Welsh, our favorite realtor from Boise, Idaho, says lumber prices are still up and will affect housing costs. Wondering if demand will shrink if we don't open back up. That was Jen Welsh's thought. So there are lots of things at play. It's always interesting.
Lots of things at play, and really, I think that with the mortgage rates, when they dropped them because of the corona, surprisingly, like housing market, at least like where I'm around here, has been very strong. So people are, I don't know how you're seeing it, Will, but at least here, like in the Philadelphia area and in like New Jersey, it's very strong, like prices are moving up, right? So people are buying.
There certainly isn't a lot of demand. A lot of supply, and there's definitely demand. I mean, things are trading. So that should lead to higher prices. That's for sure.
That's what it seems like, that the prices are getting pushed higher around here. Not sure how the rest of the, but definitely around here, it doesn't seem like the current, houses started popping. Let's move on to really quickly. We'll take a look at the insider trade screener. And then let's see if I have time for some bullish bearish ideas. So again, we've been doing this for a couple of days now. Let's take a look at what's been popping up in the insider trade screener from recently from the buy side and sell side. So I'm just going to take a look at the most recent filings here. And these are SEC Form 4 filings where insiders have to report, I think within 4 days of their transaction, what they did. So we're looking at the most recent. I have some of these filters. So these are my filters right now. You're not going to see them, but I'm still working on this report. So I'm just filtering out kind of the things that are a little bit more noisy, harder to figure out with derivatives and grants and stuff like that, and looking at purchases and sales that look like they were in the open market, not a result as like gifts or grants or conversions of derivatives. Also, let's take a look at transactions that in notional had $1 million notional value or higher. So the trade had to be, worth more than $1 million worth of stock buying or selling. And let's look at the buy side first. So this is what I did. Most recent filings on the buy side with $1 million notional or higher. So there are 3 of them from yesterday. Wait, I got 4 of them from yesterday. 1 popped in from this morning, 8:30. So here's one from this morning, KHC. It's a director. He made this transaction December 2nd, bought the KHC Kraft Heinz for $33.22, bought 90,000 shares worth. Stock's $33.45, up a little bit, 0.7% from that transaction. And that was almost $3 million worth of stock. Let me take a look at that transaction. So you click on this December 4th. All right. So this came in today. So here's the transaction. There's the person, KHC. We see did 50,000 purchase, 40,000 purchase at different prices. And to me, it looks like just established the new position. And here's some footnotes here. So these footnotes are important. You can't really, structure footnotes. So you have to go there and kind of just read them because those are their notes telling you what's going on. But that looks like a new position in KHC for this director. Let's take a look at, some of the ones that popped in yesterday. So HCHC, let me take a look what that is. Telecom services. So let's see what this guy did. And there's a couple trades here, HCHC. So 10% owner, director, bought on December 2nd. Looks like December 3rd he did a transaction. December 2nd, bought it for $3.38. That stock is a little bit higher from there, up 3.1%, bought 1.3 million shares. So that's $4.5 million worth of in notional value worth of stock, and increased his position to 17.5 million shares. Over here, same thing he did for $3.54, bought 1 million shares, a little bit more, for a notional value of 3.7 million, increased his position again to 18.6 million shares. AMH. Oh, that's like we were just talking about Toll Brothers, right? So here's another one. This is in the same business, right? Don't they? Or they wait? They're not home builders, right? These are. It's a REIT. So Toll Brothers is a home business. They're just
well that. Well, let's be. I think that is one of the few companies that, I mean, they gobbled up homes after 2008, and I think they are the largest single family owners of properties in the country, and
really?
they rent them out. So they have an inventory so they could affect the market because they have an inventory that they could sell, right?
Right.
They've been.
So right, they're not building homes; they're buying them and renting them.
They went to all the markets that, that we read about, right? Vegas, Sacramento, Florida, Arizona, and they gobbled up everything. Literally, I mean, you read stories about it. All of a sudden, they started having auctions, and all of a sudden, the same guy was buying everything at every auction.
Oh, really?
I mean, in different areas, it was a different buyer, but they were placed by this company, and they just bought up everything.
Okay.
Yeah.
So, there's a couple. We see a couple purchases, right? Here's one December 1st. Here's one December 2nd. Looks like both times here, $6 million worth of stock bought, $3.5 million worth of stock he bought. So, that's by this owner, 10% owner, in that company. We're right up at 9:30, Will. So I didn't get to everything, but.
Well, great job, Dean. I have to say, Mike Moreau brought up your awesome haircut. He loved it. And
thank you for the. Yeah, it was way overdue. Thank you.
Hey, Chameleons, thanks for joining us. You have a great weekend and a safe trading day. Dima, great job as always. Any parting words of wisdom for the Chameleons?
No, thank you everybody for joining us. Have a great trading day. Stay safe. Hope to see you guys on Monday.
Have a great trading day, everyone.